Welcome back, everyone. Matt Tack and Pat Hilton bringing you Reap the Harvest Live. Matt's going to be discussing raising capital today. But first, we've got our intro video reformatted for streaming. This took me forever, so you're darn right we're going to play it. We'll see you in a minute. Oh, man, it doesn't get any classier or more crisp than the Matt Tack intro with the fam, Turtleneck Kelly in the mix, our supermodel co-host. And Matt's going to be talking about raising capital today because he is a real estate man. And while we do a lot of personal development today, I was telling him that, man, it's like people need information on how to grow their business too. And Matt knows a lot about that. And while he's very modest about how much he knows, I'm telling you, this guy knows a lot of good stuff. So why don't you talk about why you're doing what you're doing, how people can benefit from partnering with you, and, you know, my favorite term in real estate, cash on cash returns.
Cash on cash returns. Yeah, no, a lot of people talk to me about, like, how do you raise capital? And I see that question's always brought up. And there's a lot of people better than me about it. But really what it comes down to is relationships and then the ask, right? You're going to get 1,000 no's before you get a yes. But it's just being transparent and organic about what you're getting into, right? Being diligent, specifically about, I had a guy come to me even today just about looking for a deal sponsor. And that's good, but you got to underwrite the deal. And so he's telling me, he's like, oh, this guy needs a deal sponsor, the assumption of the loan. Seems like a great dealer. I'm like, all right, do you have a T12 and a rent roll? We need to take a look and we need to underwrite the deal as far as if the numbers work, because the numbers got to work. And then we could, talk about getting a deal sponsor coming in. So just being diligent about what deals you're becoming part of, who you're partnering up with. You always got to partner up with the best people. But then what is the capital raise like, right? You just got to let people know what you're doing. So I just recently rolled on a partner within Cades Capital Ventures, and we're just going to be working in tandem, just doing various efforts. And we underwrite some deals coming in, but we also look to partner up on other deals. And what's the capital raise look like? Well, I mean, the capital raise looks like, so I just want to let you know, SEC regulations, obviously, you have to have a role within side of the capital raise. You just can't be capital raising for somebody else's project, right? You have to have an actual individual role, whether it's soft due diligence, hard due diligence, the capital management, asset management, whatever it might. You have to have a role. Then you can go ahead and you can have the designated role outside of that of maybe raising capital. So what does the capital raise look like? Well, the capital raise looks like is just building out relationships, right? You're going to have a pitch deck. You're going to have a model associated to whatever you're raising for. That's all going to be confined and constructed within a PPM, so a private placement memorandum. That private placement memorandum is like basically like the stockholder agreement. So as if you're purchasing stock out of Apple, same thing. You'd be purchasing stock out of this independent PPM that basically holds everything together for legality purposes into a physical hard asset. The capital raising piece is not going to be, obviously for everyone. You got to have some thick skin. You're going to see here a lot of no's. Nah, it's not for me. I take no's a lot of times. It's not right now, especially if you got a good deal. You want to push it through, but the main thing you just want to do is present the material that you have at hand, whether, pitch deck. And I always love feedback on my pitch decks. There was a couple guys that I've sent out to, and they just gave me a little bit of feedback on how this could be done a little bit differently. So I always love that. I love getting a little bit better overall. And then explaining your pitch deck and the returns. And you always have to remember, I always remember, like when I speak to anyone in regards to some of the offerings that we have on our plate, I just said, it's inherent risk. So due to SEC regulations, I got to tell you that that without a doubt, something can happen where you might not get your money back, right? Or you might not get the projected returns. Now, I think there's just a beauty in a hard asset as far as the returns on the depreciation side, as well as on the cash on cash, as Pat calls it. He loves it. But what does the capital raise look like? And it's really just building and cultivating trust within relationships. Trust is so big. I know we talked about this a little bit back, but it's just trust. You have to dot your I's, cross your T's, and just make sure that that you have complete trust and maybe the deal sponsorship team. If you're going to be a capital raiser on it, the deal you bring, you have to have complete trust in the deal that it is going to meet those or beat those projected returns, because everything's based off of a forecast, right? And a business model and a business plan that you're going after, what the value add is going to be, what the projected returns are going to look like, what value add is being incorporated into that are going to increase those rent rates over time. So it's just being very diligent about who you surround yourself with, number one, but then just having the security that, hey, what I'm pitching is something that is a good deal, that I really want to pitch to people. You got to have a certain level of belief in it and enjoyment that you're getting out of it, that this is like a product that you can actually sell. It's tough to sell something that you don't believe in, right? So I think that that's probably, if you don't believe in a product, you're working for a company where you don't believe in that product, that's probably not the best place for you. I would never try to sell something that I didn't believe in. So for me, you really have to believe in it. And then people have to trust you. And so that's why I always go back. I was going back to a couple previous episodes of, people invest in people they trust. And this game we call life is just an inner circle of a knowledge exchange. And people just have to trust. You have to be transparent. And I don't like, when people aren't transparent. So typically, even if I'm cut out of a deal, I try to be as transparent as possible across the board. And I try to just let people know, hey, this is what it is. This is at face value. And I'm willing to connect you to. And if you guys choose to cut me out of a deal, it's so be it. So there was a meeting that I had yesterday that I just took the trust of somebody to say, hey, if you can, keep me in the deal, cool. If not, and the numbers don't play out and it's not a deal, no big deal. But I didn't want to spend too much time on it, but I thought they could be the ones to take it down if it's if it's anybody. So I just had complete trust in them. But I think transparency, it goes back to transparency really of raising capital, because no one's going to invest in you if they don't trust you. And they really have to trust you. And they have to believe in you that you're not gonna you're not some slime ball that's gonna try to run around something or try to make a buck on it. And I think that's speaks value to a lot of these people, specifically like Ed Cobell, man, like probably one of the best capital raisers that I know, specifically within the Southeast region and all over the United States. Actually, he massive projects, tens of millions that he's raised, if not hundreds of millions that he's raised on some of these crazy projects that they've done. He's more of a luxury Class B kind of guy in the development, the DeBartolo development group. So those are the guys that he just has trust. He's just built up trust for a long time, and people believe in him and believe in the product that he can put out. That's just it's just you gotta. There always has to be an ask in capital raising, but you have to believe in the product that you're putting out. Tim Brott's another guy that, I'm sure a lot of, my followers follow him as well. It's the same thing. They trust him. He's putting out a good product. He's an unbelievable capital raiser. He's surrounded himself with tremendous people, and he's able to get the job done. So he's raised way more capital than I ever have. So it's one of those things of raising capital. You have to surround yourself with the people that have the capital, right? You always have to surround yourself with those people that can deploy it. But then they have to believe in you, and you have to believe in them. And like I always say, not all money is good money. So you definitely want to make sure that you are surrounding yourself with the right people and the right investors. And then from there, it comes the ask, right? Do you want to invest in my particular asset or something that I'm bringing to the table that might be a product or something else? But it's all about building that trust, and trust doesn't come just right off the bat too. It comes over time. So you definitely just have to make sure that you're. I was talking to somebody the other day, just using a lot of discernment. Discernment was something that we had as a topic. And really just making decisions that are going to impact you 5 and 10 years down the road. How's this one decision going to impact me 5 and 10 years down the road? So, or tomorrow and 5 years, 10 years down the road. So we just want to make sure that we're using discernment in our approach in our daily lives of when we're raising capital, that we're surrounding ourselves with the right people, that we're not just jumping into deals to jump in deals. We're not, the whole thing, specifically with real estate, is you don't buy for retail. You buy for wholesale or below wholesale. And then when you do that, how does everyone make money off of it? And life's a team game to me. My family's a team game. And that's just how I roll. Money isn't the end all be all for me. Do I want to make a lot of it? Yeah, for sure. Who doesn't want to make a lot of it? But it's just not, it's not the end all be all. So how can everyone make money on the deal? Well, that's the beauty about commercial real estate, right? So we got a question right here. So how can everyone make money on the deal? Well, that's in syndications. You have a breakup of limited partnerships and general partnerships. Now, the general partnerships are going to be the deal sponsors or the asset managers. So the asset managers, typically, how things equity structure in a deal, you're going to have debt that leans against. So there's going to be senior debt that leans against a specific deal. Typically, that's going to range from anywhere from maybe like 60 for smaller markets. So one of our assets in a smaller market, so it couldn't get anything over than 65% loan to value. It's more tertiary. So 65% loan to value. So that means that there's a 35% equity spread as far as raising capital, and then also like the value add or the capex you have to build into. So typically you're going to be raising any type of money that the general partnership obviously puts down is more so due diligence money and down payment money. Now, sometimes you'll actually raise the down payment and then you'll actually raise the capital expenditure. So you actually raise the entire thing. So that spread is that 35% spread is controlled by a limited partnership and by a general partnership. Now, we look for projected returns between 8 and 10%. Now that's on that's usually an aggregate of the hold in a syndication. So in a traditional syndication, it would be an 8 to 10. It might be a little bit less earlier in the earlier years, just because you're building in that capex where you're creating that lift. When you're creating that lift, obviously there's more spending than there actually is on the cash coming in. So the cash flow is actually a little bit more suppressed earlier, and then as capex is deployed and rent rates go up, well, then you're creating more surplus cash flow in the middle of the years. So you're creating a tick up where more cash flow comes in, and then obviously more return on the cash specifically for the investor, so on their principal. So that's just one way that limited partners make money. And then how do general partners? So it's a split of the equity that's in play. So like the 35% of equity in play, 80-20 split, and then obviously that number goes up as principal is paid down on your senior debt. So how do people make money? Well, people make money in a couple different ways, and we can dig into this a little bit more into future episodes. But they make money on the cash, so the cash flow of the asset. So cash flow being you're going to have your net operating income minus any senior debt gets you to your cash flow. So then you're going to have your cash flow. So they'll make money on that, right? That money then is split between the limited partnership and the general partnership. Now, those things are split, and I can go into different syndication models, but typically they're going to range from anywhere from like 70-30 to 75-25 to 80-20. So those are going to be, sometimes there's even hurdles built in. So it's in the underwriting process. It's very unique, but that's all super transparent. So like we give you the business model of what it looks like, and then it's split up. So there's going to be a financial forecast as far as overall projections, and then a third-party property management company would be put in place. We have an accountant that controls the books and the PPM, an attorney that controls the PPM. So then all those are super transparent, that then are given to the LPs and the GPs, so you see the numbers on a month-to-month basis, and you'll know what your cash flow is based on the performance of the asset. So like I said, the raising, a little off topic. So that's more the intrinsics of how does everyone make money in the deal? Well, it's going to be a split based on every deal. Now there's also another element too, and I know I'm going all over the place, but there's another element too. There's going to be a debt raise, and that's more of a broad syndication. We can talk about that, and I think I've talked maybe about it in previous episodes. But that's more of a debt raise. And then there's a perpetuity kicker on the backside where it's built into the equity structure of the deal. There's a whole slew of different kind of models. The most recent one we went into 75-25, and there's a 25% that general partnership controls. 75% is the limited partnership. They control that piece. And then the general partnership, which is the deal sponsor, is obviously broken up into the different layers of a general partnership. And so, the team members provide different roles, whether it's the underwriting, whether it's the asset management, investor relations. So they'll actually take care of all that. So, and everything's transparent as far as overall the documentation and then the P&Ls. That's where you see your returns. So to answer that question, that was a little long. We always target between 8 and 10% returns. That's cash on cash. And then obviously you're going to have your internal rate of return as well as the depreciable factor. So there's a number of ways to make money
on cash.
Yeah. Okay.
But yeah, we should do that every Wednesday. You should break down some real estate because we do a lot of momentum personal development on Mondays, and we do a lot of what we're going to do challenge wise going into the weekends. But moving forward, I know that you're going to have some webinars and stuff that we're going to do. We're going to be opening up the Reap the Harvest group, and a lot of people that are online right now are trying to figure out how they can cash flow properties, how they can get in on deals, how they can wholesale. And this is stuff that Matt knows more about than he gives himself credit for. So
yeah, no, I mean, the thing about like this, and the reason why, this is the arena that I'm in, is that it allows people to nearly, if you think of the long-term effects, and I have a lot of investors that, are in their early 30s, the long-term approach to this game allows you pretty much to supplement your income with cash coming in on a quarterly basis that might actually, if you invest enough cash, that it might actually take care, and it's just passive cash flow coming into you that you're like, now I'm getting like a second check every month. I'm working for my check and I'm getting a second check every quarter that's comparable to what I'm making on a month-to-month basis. So passive cash flow is huge just because it gives you more time, right? And money, that's what money creates, is time. And that's the beauty of real estate, is that at the end of the year, it allows you to depreciate your tax liability. But then throughout the year, it allows you to give, cash flow on a quarterly basis. So we pay our investors out on a quarterly basis. It's just, it's one of those things where it's the beauty of a hard asset that you're able to do. You're able to make unique decisions that will pay dividends into very, in the long-term future. So,
it's a marathon, not a sprint. And I actually saw a buddy of mine, Alex, on, I think it's Steve Trang's Real Estate Disruptors show. It was a clip on my Instagram, and he was talking about how, the real estate game is a marathon. And I think that's with anything, whether you're a media person or you're a songwriter, or you're an artist, or you're, building any kind of product or service. It's a marathon because you got to build, like you said, you build the trust, you put in the work, and you earn your stripes. And I think it's awesome, man. I think it's awesome what you're doing. And like I said, Matt can go into this stuff all day, but he does have a business to run. But we will be doing webinars and stuff like that. I'm going to drag you into the webinar game because there's people that need to learn this stuff. And you have a lot of associations, both of us in common, some of them that are high level players in the game. So anything we can do to help anybody get in touch with the right people or get more deal flow or whatever, pop into the comments, give us a follow. We're doing it every week and we're here for you. We want you to be successful, reap the harvest in the mix. And yeah, man, get back to your stuff and we'll see you on Friday, dude.
Please follow me on Instagram @officialmatttag.